Hi, thanks for visiting my channel. For anyone new to this channel, my name is Tanveer Chaudhary. I'm a certified financial planner and real estate investor. I make educational videos regarding wealth building, financial planning, and real estate investing. I make one fresh video every week. You can visit my channel and watch videos about different financial planning and real estate investing topics. Before we get started, if you think you learn at least one new thing from this video, all I'm asking is to like this video and subscribe to this channel so more financially savvy people like you can benefit from this information. Refinancing is a process where you keep 20% of the equity in the property and borrow back 80% of the appraised value in the form of a new mortgage or home equity line of credit. This is called 80% loan to value. Today we are not talking about the most obvious benefits of refinancing your property, which includes consolidating debt, resetting the amortization period, improving the cash flow, or potentially getting the low mortgage interest rate. Today we are looking at refinancing from more real estate investment standpoint. Before we get started, there is a word of caution. Anytime you increase the size of your mortgage, either by refinancing or purchasing a new property, your mortgage balance will increase and you should have the ability to debt service it, either with the amount of rent you collect if that's your rental property or with personal income if that's your principal residence. First power of refinancing is that refinancing proceeds are tax-free. They are not tax-free forever. They will be eventually taxed, and taxes are deferred until you sell the property. You're just getting the access to the capital early and able to reinvest it. You are also able to maximize the funds available to you since you are not paying the transaction cost of selling the property and also not paying the capital gain tax. You can watch my video about 10 ways to reduce the capital gain tax at the end of this video. Second power of refinancing is the tax on the refinancing proceeds is tax deductible as long as you're investing the proceeds in another investment and not paying down the mortgage on your principal residence or making consumer purchases like cars. Third power of refinancing is infinite returns. Let me give you an example. If you purchase a property with 20% down and property appreciates another 20% in few years, you can refinance the property and borrow back your original 20% down payment. Once you borrow back all your original investment by refinancing at 80% loan to value, you have nothing invested in the property at that point, and any returns from that point onwards are now infinite. Fourth power of refinancing is ability to buy a property with zero down. Once you refinance a property or use HELOC on one property to put full down payment on another property, you have just purchased a property with none of your own money, therefore with zero down. Fifth power of refinancing is a strategy called Smith maneuver. In Canada, the mortgage interest against your principal residence is not tax deductible, but you can make it tax deductible by getting a readvanceable line of credit or HELOC against your principal residence. As you pay down principal by making regular mortgage payment, your HELOC will increase. And eventually you will pay down enough principal to put 20% down payment on a purchase of a rental property, interest on which is tax deductible since you're investing the funds in a non-registered investment with the hope of making a profit. You can repeat the process all over again and eventually pay down the entire mortgage on your principal residence and making it tax deductible by borrowing back using HELOC to invest in a non-registered securities portfolio or portfolio of rental properties. That's all for this video. If you think information like this can benefit someone, please like this video. Also comment below and consider subscribing. Thanks for watching and see you in the next video.